we're once again faced with a higher oil price this morning, 85.50. And for a long time, yes, the language has all been around tit-for-tat skirmishes at the edges of an MOU that left the talks intact broadly and the ceasefire broadly intact. Is that still the case when you've got President Trump talking about a 20% toll through the Strait of Hormuz? I mean, how fundamentally do we have to rethink what's happening in the Strait?
I'm not sure how much has actually fundamentally changed versus how much the kind of interpretation of the situation has changed. So, a week ago, the idea was this is going to be tit-for-tat strikes as go on forever. This is going to be one of those strange ceasefires where there's never really a ceasefire, but it's not going to really escalate again. It's all noise. It's not tradable. There's enough oil in the world. They'll find a way to get oil out there ahead of the midterms. It was the kind of narrative we got. Now, the slight tweak is the same starting point of it's like tit-for-tat strikes are going to continue forever. It is never going to end. The ceasefire is going to, never really be a proper ceasefire. But we need a higher premium for oil prices as a result. And I think that's really, really important. People have realized that both sides can find it easier to disrupt the other side. So the US can disrupt Iranian flows. Iran can cause enough problem in the Strait to keep on disrupting kind of general flows. And therefore, the Strait of Hormuz in terms of shipping is not going to normalize probably again this year, or maybe ever again to the way it was, because we're going to build alternative pipelines by next year. So ultimately, I just don't think it's ever going back to the way it was. And therefore, we need a slightly higher price in oil prices going forward. And that is changing the whole dynamics around the rates conversations for central banks everywhere.
Do you think that, so structurally higher inflation as a result of that, and whether Kevin Warsh actually addresses that, whether he nods to that in his testimony today, whether he has to accept that maybe we're in a world of structurally higher inflation?
He might do that. As we all know, he's going to try to say as little as possible, but he'll be forced to. It's so long speaking, he's going to end up saying stuff. We're going to overinterpret what he says. I think it is structurally higher inflation, but it is obviously supply-side inflation, so it makes it a little bit more complicated for central banks. Look, the Fed is definitely live for July. For the data today on Warsh Day is really, really important. I'm in the camp that they ultimately won't hike rates. But, you can't have that view, super high conviction ahead of the testimony, ahead of the data today. I think he wants to sound very open-minded. I don't think he wants to sound conclusive either way. I think we might still be in a situation that tomorrow where July is still live, but ultimately I think the Fed will disappoint.
That's an interesting point you make about whether we overinterpret. I mean, he deliberately does not want really to communicate any guidance. So what is the point of talking for so many hours, I suppose, is the, I know he has to make his appearance, but from a market's perspective, is there really anything to listen to?
Yeah, look, I think people still are trying to know who he is, know what his biases are. I mean, this is a person who's portrayed very different images on his inflation hawkishness over the past 20 years. And so therefore, I think people are really trying to find out what is the true Kevin Warsh as Fed chair. So I think that people do need to kind of study it and interpret it. The problem is that we've now had, 16 years of kind of having these press conferences and so much kind of forward guidance, the dot plots, and we've gone through a world where people stop looking at data. We talked about this a lot in the program, and I used to get really annoyed at people who wouldn't look at the data, and then they'd wait till a Fed person told them what the data said a week ago, and then finally relax. You're like, we knew the data already. So I'm delighted we're going back to a world where people actually look at the data themselves, but people will overinterpret in the short term.
Let's hear it for thinking for ourselves then, Tom.
Yes, we'll try and do more of that. And Mark Cudmore is that inspiration, joining us on set this morning. Bloomberg Markets and throughout this week, I believe. Bloomberg Markets Live Executive Editor Mark Cudmore.